You're listening to The Wrap,
a Warren Averett podcast for business leaders,
designed to help you access vital business information and trends when you need it,
so you can listen, learn, and then get on with your day.
Now, let's get down to business.
Welcome, everybody, to another episode of The Wrap here at Warren Averett. We're glad to have some of our friends with us today. I think this is episode 63. Today, we're going to be talking to folks in our technology and life sciences industry. So they work with a lot of companies in that space, and so we are happy to have them here today. Also with us is a new co-host for the Wrap, and I'm happy to have my friend Derek Johnson out of the Tampa office. If you remember way back episode 14, we talked about recruiting, we talked about retaining talent. Derek, it is good to have you as a co-host today.
Paul, thanks for having me. I'm Derek Johnson out of the Tampa office here, a little over 9 years at the firm, spearheading the staffing and recruiting arm for our Florida operations. But enough about me. The stars of the show, both Larry Pirkle from our Birmingham office and Yogesh Patel from our Atlanta office. The people need to know. How about you two introduce yourselves for the show?
Yeah, sure. So before I do that, I guess one thing I will bring up, Larry, I think you and I share a pretty big milestone here at Warren Averett. We're 20 years in. So That's exciting. We've, it's gone by fast. So I think it's definitely a big milestone for us and excited that we've reached that. So a lot of my time spent here at Warren Averett is advising fast-growing companies, founders, CEOs, really both early stage companies all the way to mature middle market that are typically either acquiring and or looking at some type of transaction on the horizon. And a lot of the companies are backed by either growth equity firms or may even have a control investment, by private equity. So that's where I spend most of my time. Larry?
And you are correct. This is 20 years for me as well. So but it's been fun and it goes by quick. But I also work with a lot of tech companies and emerging growth companies and private equity companies and their portfolio companies, and have the privilege of leading our technology and life science industry.
Gentlemen, we're really happy to have you all with us today and look forward to this discussion. So let's really jump right in. So there's a lot of challenges and opportunities that these types of companies in this industry face that maybe others don't. And today we're going to talk about some of those. So I think one of the first ones we wanted to talk about, Larry, was to start off with you. What challenges and opportunities are companies in the industry facing as it relates to raising capital?
Yes, I think one thing that is facing the industry, particularly as it pertains to raising capital, could be the macro environment of interest rates increasing. If you look at the public markets as an indicator, we saw them decline significantly in 2022 last year, and then rebound considerably in 2023. And I think some are starting to wonder now if maybe that rebound, anticipated rates leveling are starting to come down sooner than they're actually going to, that it now appears that they're going to actually come down. But I think as interest rates go, they have a direct impact on valuations, and the valuations can definitely have a direct impact on raising capital.
Yeah, and I agree with you, Larry. I think, really some of the challenges, I think 2023, raising capital in 2023 is a lot different than 2021 and 2022. I think a lot of technologies coming out there, what they saw was term sheets overnight, last couple of years with high valuations in terms of, growth equity firms and private equity firms willing to invest. We've seen that slow down a little bit, right now. And I think overall year over year capital raise has gone down. Series A and Series B have gone down, and the valuations are becoming more realistic. So I think that's really part of the challenges right now. And then you throw SVP and Signature Bank as well with the mix. So I think just access to capital, continues to be somewhat of a challenge, more restricted right now than what we've seen the last couple of years. But on the flip side, I think opportunity-wise, there's still a lot of capital on the sideline. So for good, fast-growing companies, especially if you're kind of B2B SaaS, high margins, high ARR, you're going to be able to raise capital pretty easily, I think. So there's some higher valuations out there that are ARR company driven, but I think those are more outliers. But, for example, I think what we're seeing, Series A, roughly $2 to $4 million raise on average, valuing at 25 to 50 million, just to give you an idea. So I think on the opportunity side, there's still a lot of options out there in terms of meeting some suitors to raise capital.
Yeah, I agree. I think deals are still being completed. Maybe buyers are just being a little bit more cautious in this environment. And so, yeah, but at the end of the day, maybe the dial's just turned down a little bit, but definitely it's not turned off.
That's very interesting, guys. So still some silver lining. There still are some good things going on. In the meantime, what are these groups, what are these companies doing, and what challenges are they facing trying to just grow their revenue, just to do good business and do a lot of it?
Yeah, so I think growing revenue, as Larry kind of alluded to earlier on at the top, was just the macroeconomic conditions, right? So I think if you are a B2B technology company selling to enterprise clients or any other type of, business customers, the challenge in growing the revenue is, are you one of those applications, cloud apps that is not necessarily, it's nice to have, but not must have. So I think in these conditions with CEOs and CFOs, they're looking at probably 200 cloud apps, right, that they have. 20 of those may need to be scrapped. So, ensuring that you're not one of those 20, that you're continually developing the product and have that must-have, type of platform that your customers want.
Yeah, and I think revenues is definitely something for companies in this industry to focus on. Historically, ARR, annual recurring revenue, has been a significant factor in valuing these companies. So it can be a great time to, look to your customers, listen to their feedback, maybe reinvest in some development of new features that meet their needs, and really focus on revenues. But at the same time, I think it's also a good opportunity to focus on other things, such as maybe even your labor. It can be a challenging time right now to find qualified developers in this space. Inflation has affected salaries for the labor in this area. And then there's also the shift in, more and more professionals in this industry being working remote, and that may be remote here domestically. It may even mean that you're working with developers across the globe.
And Larry, you just reminded me of something. So, in terms of growing revenues, Derek, you had mentioned, so we see a lot of companies with somewhat of a significant cash balance. So I think it's key to understanding, where do you invest that? As Larry mentioned, is it in development? Do you go out and look for a strategic target to acquire? So there's different ways to grow those revenues, right? So I think if you've got the cash or the ability to invest, making sure you make the investment in the right places is also key to growing the revenue.
Yogesh, you mentioned product development. Let's unpack that a little bit further, because I'm sure that that's another huge challenge and opportunity for folks in this industry that maybe other industries don't have and don't see. And so can you go a little bit further on kind of what those challenges around product development is that you haven't already talked about, and what they need to be thinking about?
Yeah, sure. So there's, generative AI is a hot topic, right? So I think product development wise, it's continuing to enhance the technology, and it may not be Gen AI, but I think your customers continuously look for you to enhance your product, and they expect that. So how do you do that? I think some of the things that we're seeing a shift is what Larry had alluded to as far as developers go, is you may have some great expertise in-house with the DevOps and creating the platform, enhancing that platform, but you may not have anybody that has AI experience. So now you've got to go out and find that talent, right? So I think that's one of the challenges that you see in terms of product development, is making sure that you have the right resources in-house, or whether you're outsourcing as far as development goes, and continuously looking for that as you grow the product.
And I think with product development, like Yogesh alluded to, new technologies are coming on the scene all the time. The big one that you referred to, when Microsoft goes and invests in ChatGPT, it gets on everyone's radar screen, and all of a sudden there's a rush to AI, and you see that in the public market valuations indicating the premiums that are being paid for that industry. But technological change is kind of the norm here. So in this industry, so whether it's AI right now or whatever the next thing is down the road in the future, this is definitely a challenge, but also an opportunity in this industry, is managing the technology changes, not being caught by surprise, but embracing those and looking forward to what's the next one, and how can you leverage it, how can you take advantage of that change.
Yeah, I think one good example just to share with you is Bill.com. I think Bill.com has like a $12 billion market cap. they've been around for a while. Their technology's been around for a while, but they still demand a high stock price. Why is that? Because they continuously enhance the product. So if you go to Bill.com now, they've got some AI built in that technology, and I think they're going to continue to make investment in that AI. QuickBooks is another one it's been around for a while for SMBs. They're continually enhancing the product overall. And these are just accounting and finance applications I'm giving examples to, but really it's across the board for any application for companies that use technology.
And with this, I guess undergirding all this is you're trying to keep an eye on your competition by, making sure your product stays current or ahead of what others in your space are doing. And so you see a lot of companies employing approaches where you try to get out a product quick to the market, some sort of minimum viable product so that you can get out quickly, either your initial product launch or maybe even subsequent development, subsequent enhancements, so that you can get out to market quickly and that you can immediately start obtaining user feedback from your product that you can then use to build into the next release or the next enhancement or the next upgrade to your product.
Want to receive a monthly newsletter with Wrap topics?
Then head on over to warrenaverett.com/the wrap and subscribe to our email list to have it delivered right to your inbox.
Now, back to the show.
You guys talk about the constant change and development and redevelopment. And, I just stretch back to episode 14 when Paul did have me on, and you hear about retaining talent. And Larry, you dipped your toe in that pool a minute ago, and my staffing census started to hum in my head, and all of this development requires great talent. So what are you guys seeing? What are your clients telling you? Larry, since you sort of cracked that egg, why not you go first? But tell me, what are they seeing with the talent in their staffing situations? What are they up against?
Yeah, I kind of went through it quickly, but I think it is good to sort of stop here and pivot and just sort of expand on it a little bit, because I think it is important. At the end of the day, technology is all about those who are creating the technology. You've got to have the developers who are writing the code and developing the technology. And like we mentioned, the labor market is tight in this area right now, which so first, just finding, good developers. And I think companies are having to be creative in how they do that, whether it's offshoring to other countries to obtain that, the right amount and the right skill set, or maybe it's a hybrid of US-based and overseas, global-based developers. Also, that can have an impact on salaries. You may get some salary benefit in other countries, but that's another topic that has to be addressed and managed, because salaries are increasing as the demand for developers increases. The price for those developers is going up, and then as you gain the benefits of, maybe more availability, maybe a little bit better pricing of salary level from going overseas, but then it creates its own challenges of managing remote workers. You've got different time zones that have to be managed. And even in the US, the management of global workers, pretty much everyone went home for COVID, and some tech companies are starting to reconsider that. And, maybe it's certain days of the week, or maybe it's a mandate to get more and more people back into the office. I think every company is having to think through, how do we manage our remote workers, and do they stay remote, or do they need to get back into the office?
So Derek, I'll speak a little bit to what's near and dear to your heart, which is finding the right candidate, right? So in terms of aspects of a technology company that's growing fast. So a lot of times it's about asking the right questions. When you find the right candidate that might, on paper have the right experience that you need, it's what are they really looking for? Because in a technology company, when you're building the product, when you're a $1 million company and building that technology, is completely different than when you've built it and you're now $25 million and $50 million. And what I mean by that is, the developer may be looking for a different experience. Maybe they already want a built product, and that's what they want to do in terms of moving forward, or they may want to build a product. So I think it's kind of important to understand what they're looking for to be able to make a good match. A lot of times folks want to work at a startup, but what they really may be looking for is a Google or a Salesforce that has kind of that work and play environment, but already established, versus a true startup where you're just grinding it out, right? Trying to get to that 1 million ARR or 5 million ARR, which is really a grind for companies, to make it all the way up to that level, when you're first starting out.
We're talking about things that are kind of specific to this industry. And I know you and I have a lot of these conversations because your clients and always talk to our group, Yogesh, y'all's as well. Every company in the world is quickly becoming a data company because we're all holding information. But that's at the core of what a technology company is, right? So I'm sure that there are challenges that you see when you're talking to your clients as it relates to how they verify, vouch the security of the data that they're holding. Again, everybody's about to be in this space, but the technology industry really kind of built this. So we see a lot of things in the news about Google and Microsoft and GDPR over in the European Union. California's got their privacy law. So what are the challenges you're seeing with your clients as it relates to that verifying of the data that they hold?
Right. I think that cyber security, cyber protection is very important, especially in the technology space, because as you mentioned, you are holding many times as we move more and more to a SaaS environment, you are holding your customers' data on your systems and your networks. And so I think there's maybe at least two layers of defense. There's the internal and the external. From an internal standpoint, that can be everything from the applications and programs that you obtain to protect that data. It can also be the people that you have, the security experts that you have in-house to make sure that you've got appropriate policies and protocols. But then I think more and more customers, while they may trust you, they're being held responsible for verifying that trust. And so it's not uncommon for a customer to call and say, we need to see your SOC report, which is really just a report that a third party, such as an accounting firm, has said that your policies and procedures are in accordance with a particular framework or standard. And it's a written report that backs up and communicates to the third parties that are trusting in your company that you do have appropriate safeguards and controls in place.
Yeah, and Paul, you and I just spoke, I think, last week regarding a company that called because they formed a strategic partnership with a public company, and now all of a sudden there's some requirements later on that they weren't really prepared for or anticipated. So I think really the key is just anticipating, especially when you're growing fast, of what those requirements may be. And we've got a few examples of this. There was a fintech company that we worked with who got acquired by a strategic public company. They were growing fast, and they landed a client, the client they've been wanting to land for quite some time. Well, as that due diligence process played out, they had to get a SOC 1 report. There was no ifs, ands, or buts that had to be done for that contract to be signed. So that was quite a bit of challenge to get through that process, in terms of making sure that contract could be executed. So really, I guess the moral of the story is just anticipate what those requirements are. And it's better to do that on your own timetable, right? Versus having forced to comply and then going through that process. So I think that's really the key there when it comes to some of these, when you're housing data and some of the potential compliance that may come with it.
The key takeaway from that, Yogesh, is anticipate it, right? I mean, like you can't overstate that enough, because how many times do we get a phone call and it's, hey, I need this in 2 weeks, 2 months. And, we're talking 6, 9, 10, 10 months before something like that can really be done well.
Right.
So definitely anticipation is the key there.
And I would just add too that, when you're a tech company and you're trying to manage your cash, you've raised some capital and you're really focused on your costs and trying to make sure you really invest your cash in the most appropriate ways. It can be tempting to see security, particularly a third party assessment of your controls and your security as a cost. But then you get that one call like Yogesh was talking about from that, prized new customer, and they want that report, and you're sort of caught off guard without it. And that can be a dangerous situation as well. So I agree.
We sometimes refer to it as it's not a expense to your business. It's a revenue protector, right? You don't have that, or you don't even have the good controls in place. Your revenue is not going to be as protected as you want it to be.
It's a lot to digest. We've got SOC reports. We've chatted about growing revenues, raising capital, the old age topic of talent. We could probably go on for hours. But what if we did a round 2 of this podcast? What would be on that potential laundry list of items we could talk about?
I think to some extent, some of these are evergreen. We would talk about a number of these topics again, labor, capital, and these sort of things. A couple things we might expand into, I think, would be maybe like IP. Protecting your IP is important, your intellectual property, and we could delve into that a little bit. Further, I think maybe we could expand on the cybersecurity that we talked about. I think another area that we haven't spent much time about, but we could dive in deeper a little bit into some of the unique opportunities for technology companies from both an accounting and tax perspective. There are unique issues that present themselves. All of this spend on research and development can sometimes result in beneficial tax opportunities. Companies are doing mergers and acquisitions. And so while you could talk about the business side of that also creates certain accounting and tax situations. While it's fun to talk about generating revenue, at the same time, it can result in significant revenue recognition issues because the contracts in this area tend to be complicated with a lot of elements all going into one contract. There are some benefits. Some of the spend that we're talking about that you can get a tax credit for, you can sometimes capitalize on your books, and sometimes companies forget that you don't have to expense all that right now. You can sort of, hey, we're investing for the future and reflect on your financial statements. And a lot of these companies, because they're short on cash, may reward employees to some extent with equity. And so we could talk about equity rewards. And again, one more area that has unique accounting ramifications. So there could be an opportunity to talk about some of those topics, but also harmonize those with any impacts to their financial statements and their taxes.
Yeah, no, I think those are all great, and we could probably even do a third podcast, if you will, there to unpack some more. But some of the areas is like, for example, we talked about raising capital, right? So with that is, are you the appropriate legal structure, or what are the options, or what makes you investor friendly to take on the capital? So that's a whole separate discussion in itself that we typically advise, as well as just right sizing the business overall. Do you have the right accounting structure in place? And things of that nature. So there's several areas that I think we typically see and that are kind of hurdles, if you will, as you continue to grow as a tech company, that we would spend time talking more about if we had it today.
Good stuff, guys. So here on the wrap, we like to wrap it up in 60 seconds or less. What is it, Yogesh, let's start with you. What's the one thing you want to leave the listeners in this industry with, either something we've already talked about or, summarizing that, or something new that wasn't discussed?
Yeah, no, thanks, Paul. So I think one of the things that I would say that we didn't really talk about is make sure you have a good CFO or VP of finance in place. In terms of especially the macroeconomic conditions that Larry had outlined earlier, you need someone in that seat that's actively tracking key metrics of the business so you know where you're going. What customers are you making money on? Which ones are you losing money on? Just things that can help you continue to grow and be profitable as a business. A lot of times we see growing tech companies invest more in their COO and sales side of the house, and sometimes the finance is lacking. So I think one of the things that I would definitely want to reiterate is make sure you have a good, finance leader in place to help you continue to grow and be successful.
I think those are great points. You definitely want to have your accounting records in order. It becomes really important, not just for, managing and understanding your business and making decisions, but also, when it comes time to raise capital or perhaps sell the business, there's going to be a significant amount of transaction due diligence, and you may need assistance with that. But a significant focus on that is going to be what we call the quality of your earnings, that there's not these spikes and unusual ups and downs in your numbers, but that there's predictable and understandable trends, which is one of the reasons that, SaaS has become so popular, is that everyone wants that recurring revenue versus the old days when you're selling a license every year or upgrading the maintenance or whatever. People want that recurring revenue because buyers are looking for that as they focus on purchasing companies. And so that brings me back to kind of where I would leave it, with just focus on growing your revenues, developing a customer-centric culture, listening to your customers and their feedback, making sure that you've got great customer service and support, and that you're incorporating and listening to your customers as you think about what's most important in future product development.
Gentlemen, this was an absolute pleasure. You clearly know your stuff. You clearly know this industry. Thank you for communicating that expertise to our listeners. Derek, it was an absolute pleasure to have you as a co-host. I look forward to future podcasts. Gentlemen, thank you all very much.
Thank you.
Thank you.
Thanks for having us.
And that's a wrap. If you're enjoying the podcast, please leave a review on your streaming platform.
To check out more episodes, subscribe to the podcast series, or make a suggestion of other topics you want to hear.
Visit us at warrenaverett.com/the wrap.